No, literally yesterday I was down when the farthest down that you could go. My portfolio at its all-time high was like 2.5, and then it dropped all the way to 1.5 because I was holding app.
Waves tight, let's start the show. Download, dropping heat today. Business tip stocks and the tech runway. Breaking news edges cutting through the fray. Tune it up.
I did super good with app, and then the short report got published, which absolutely cleared me out. And then I had a bunch of him stock that I bought way too late, but I'd done decent on when it was at its 18, and then got totally cleared out on that. I'm down about 160 on him now. Then Hood at its all-time high was like 60, and now him yesterday got back up to about 44, which was really good, that move up. And then crypto was up too. So I got back up to about like 1.5. So I was still down in M, but I was like, I'm just gonna sell out here of a bunch of stuff. And then I was like, nah. And in
Yeah.
the group chat, everyone's like praising God, and Trump and how smart he is. But I'm like, I don't know. At the end of the day, I think Trump doesn't, I don't know, it's just very alarming that he's so like back and forth on this whole thing. And I think there needs to be an investigation personally of insider trading because I just think it's so volatile. And I think that even with his own meme coin, right, there's people that did super well with that. And then he tells people to buy Trump stock, which I thought was like pretty odd. But there's no one calling out that it's kind of weird that an acting president is telling people to buy a stock that is
Yeah.
directly benefiting him.
So it's interesting you say that. So I mean, I'll just say yesterday was on record the second craziest upwards rally the Nasdaq has ever seen. It was probably one of the craziest days anyone has ever seen in the market ever, if not the single most like insane day. You know, we started with the market is going down. The president of the United States, who is the one kind of dictating the tariff policy, which is generally what's causing the market volatility and the market fluctuations, posts in the morning, like you're saying. I took it a little bit differently. He posts, "This is a great opportunity to buy the dip!" exclamation marks, and then wrote DJT. I didn't think he was talking about DJT, the stock. I took it as he's signing off like Donald John Trump, like he sometimes signs off.
The guy's not stupid.
I didn't see what happened. Did his stock rip or what? What?
Yeah, it ripped, but we had guys, we had like the market was up, Nasdaq was up 12%, S&P was up I think 10 or 11%. I mean, in one day, these are literally numbers that they'll do over a year, sometimes over multiple years, that these indexes with hundreds of trillions. I think, again, like I said, like it's the cryptofication and kind of like the gamblification of the markets, right? People are just getting so much more used to insane swings. Personally, I have started to trade options really every single day. So I swung puts. I closed all of my put options last week. That actually went really well. And then I opened up a bunch of calls, partially last week, partially like a bunch this week, and that obviously has been good. Some
The
of them.
thing is, though, like, I totally agree with you, Ben. Like, the only way to really make money in a market like this is buying option calls, either, puts or calls on these upswings. I just think it's all too likely that inside parties knew when Trump was going to basically cause the market calamity that we've been seeing for the last few days. And then the White House is basically, there's the report that, the White House was going to clear up the tariffs. And then they say, no, that's false marketing. That's false advertising. Now, the market rebounded on that, what can be called fake news. But at that point, he might have well been considering abolishing the tariffs. There's no way that it didn't at least come across his desk. And then, literally 2 or 3 days later, he's like, all the tariffs are gone except for the tariff on China. He doesn't even go one by one because all these countries he claims were calling him and saying South Korea wants to come to the table. Israel wants to come to the table. Vietnam wants to come to the table. And it's like the organized way to do this would have been like one by one, say, we've made these asks to this specific country. They've agreed to it. And then we're going to have like this handshake deal that like we put in writing. And that's like our trade agreement. Not like everyone is just like back to normal and like it's like nothing ever happened. It just shows like a super high level of volatility and uncertainty, which I don't think is like really representative of US trade. We want to be the partner that solidifies our objectives and is very clear in writing and in stone of like what the US stands for. And it's like at any moment he can just change his mind and like literally affect $16 trillion on the market. And you could say stocks like Amazon, Nike, obviously are greatly impacted by tariff policy. It makes sense that, you know, their profits will be squeezed in the wake of these tariffs. But the thing that's alarming to me is you're seeing stocks like Microsoft and even other software companies like Meta have extreme impacts, which I'd say is more related to the sentiment and uncertainty that exists. Because we did see a huge rally yesterday, but then today we're seeing a huge decline again. So I think that just really rattles the fact that there's a lot of uncertainty right now. And he's like, oh, the markets are going to be great. But it's like, I don't know, right? It's like when your girl cheats on you and then it's just like, oh, it's back to normal. It's like, is it back to normal? Like maybe like we should like think about that.
I don't I don't think it's the exact same comparison. So I'll say this, right? There's one belief I have is I think, you know, I posted a tweet the night before the like the 10-12% rally saying, you know, it's kind of reacting to a meme. It's like the S&P SPX is down 20% and you're not buying. Like at the end of the day, there are companies in the index, there are companies in the stock market that will be severely affected by tariffs. There are also companies that won't be severely affected by tariffs. Because the sentiment is so negative, every company is down pretty much, right? I think the smart thing to do is to be buying high quality companies throughout the dip. Obviously, you don't want to deploy all your eggs, all of your missiles, all of your bullets right away because the dip could keep dipping. So you want to have like a kind of portfolio mindset and like understand like, do I have enough cash for certain levels of dips and things like that. But I think if you're just like totally sidelined, you are making a mistake unless you just truly don't have any cash to be deploying into the market. So that's one. Number two is I think, you know, we can look at Trump's erraticism and like decisions in like two ways. I think one, the picture you paint is definitely potentially valid, though it doesn't put them in the best perspective. I think what's interesting about the whole situation is look where we are. We went from no reciprocal tariffs pretty much to default 10% tariffs and 104 or 125%, I don't remember the exact number, tariff on China. And the market's already reacted very positively to that, right? So I think what's happening is the envelope is being pushed and pushed and pushed to the point where like people were like, okay, we just need any good news. And now we went from, you know, originally zero tariffs and you know, none of these crazy tariffs on China to bottom line 10% and 100% plus on China. These are like huge changes, but they seem kind of gradual because he pulled back the 35-75% tariff on like Madagascar or whatever, right? So I think it's all about framing and kind of like controlling how people perceive things. My understanding is that the administration right now is very anti and like very pushing China. What they want to accomplish is they want China to stop stealing IP. They want China to stop kind of being its kind of exerting its influence all over the world, especially in southern hemisphere, in the North and South America, right? They wanted to buy the Panama Canal. They're funding all of the projects in Africa, all that kind of stuff. They're fishing off the coast of Argentina, depleting all the fish. So I think the goal is to squeeze them a little bit, and more than a little bit. And I think if everything, the ideal situation is we come to the table with China, we go back to the same, if not slightly better tariffs that we had before with them, and they agree to stop doing things like allowing fentanyl to leave, stealing IP, sending spies into the country.
I just don't think they're going to do that. Like, I think your point is very clear. Like, I think if you were the president and you said like specifically to China, fentanyl rates are XYZ. We've proven that like they're coming out of your ports in these areas. We need you to shut that down. Okay, that's a specific ask. We need tariffs to go to this level, right? That's a specific ask. But right now the problem is there's no specific asks with China. It's
From
like
what we can see, yeah, from what we
yeah, but
can see.
that's but I don't think that's good rhetoric of like quote unquote what from what we can see, right? Because I think the very clear thing is like he has no advantage from like keeping us in the blind. I only think there's advantage to his presidency by being transparent of saying this is our specific ask to China. They have not met these specific asks, and therefore we're going to basically implement these tariffs upon their country that are going to impact them. And when they're willing to come to the table and do these specific things, that's when we'll have productive relationship. I don't think it's good to have this like combative relationship with China. I think the U.S. and China can be allies, I think we have a lot more in common than we want to recognize. I think they're very advanced in certain areas like technology, medical care, education, obviously. And we're super advanced in other areas, right? Like culture, productivity,
Arts,
arts.
entertainment.
Yes. Yeah, exactly. So it's like, why do we always have to be fighting with each other? You
Yeah,
know,
I
and I know
I
that there's, I don't know, I just like we can come to the table on specific problems, solve those problems, and then try to unify together to like make a better world. But
I
that's my opinion.
completely see where you're coming from. I just think that whoever originally started like whatever the quid pro quo, the status with this deals with China, where basically we kind of just turn a blind eye to them, and it did become the norm. And when something becomes the norm, people get used to it, you know. And every time, and once people get used to it, it seems like, wait, well, why are we doing this? You know, we're comfortable, and like the same thing where people are like, don't understand. They're like, well, my 401k was up and now it's down. Some people are down up to 20%. And that was their savings account, you know. So imagine like you're on a fixed income and your savings account just shrunk by a quarter. But the thing is, it needs to be done. We need to get back on the horse, and we need to just change what's going on with China, because it's impossible for us in the long run to ever be able to compete with them when they don't have to follow the same rules we do. It's like we're running a race, but you know, we're playing a game, but they don't have to, you know, they just have to kind of just show the optics of fairness, where the United States actually has to do that. And I think
Yeah.
it's going to be there's going to be a transition
That's
period,
better
right?
done though through collaboration than competition, in my opinion. Like, I think the thing is, if we came to them and said, like, these are problems that we have, we know we're causing problems for you. We can name a bunch of things that they're not happy about that we're doing. And we acknowledge those things and like we're willing to solve those things. And we just go back to the table and say, like, let's figure out like what we can check off on our side, what you guys can check off on your side, and let's figure out how to make it work. And if that doesn't work, then like, yeah, let's have this contentious
Yeah.
relationship, right?
So
But
it's really interesting. So, this is kind of when I wish, like, when you watch Game of Thrones, you actually see like how the power brokers are dealing with each other behind the scenes. And unfortunately, like in the real world, none of us here are at that level where we actually know exactly what's happening behind the scenes. So we can only speculate. I think, man, I think it's a couple things, right? I think, in one sense, you do have diplomats and you have people like publicly talking, and they're doing that all the time. There's thousands of people in the State Department, all that kind of stuff. We don't really know exactly what's happening, but the news will report on some of it. When it comes to like really squeezing, there was a funny. So I feel like Trump is really living out memes, maybe because of Barron's influence, but like there was a really funny meme where you see like she reading The Art of the Deal, and then in another frame you see Trump reading The Art of War. And it's like it's like, they're doing these like they're playing games, but these games are impacting the lives of billions of people and tens of trillions of dollars. Now, the reason why I think negotiations don't always work is because you come to the negotiation table and you say, "Hey, I want this, I want this." At the end of the day, people might agree, people might not agree, they might agree and not do it. What happened over the last couple of weeks is China's yuan, their currency, was getting destroyed. I mean, that's like a real thing that the Chinese people feel, the CCP party members feel, the president Xi's feeling. That's more than just like words. Like, here's what we're gonna do. Here's what we're like. It's almost as
Sorry to
if
cut you off, and
a
their
bomb.
whole entire government runs on the yuan, on the yuan, that they're subsidizing 90% of their industry. So if their currency gets devalued, it it could be, it could be the end
so
of
that's and
China.
what also causes a big complication to that is like, so with e-commerce, that's like that's my main business. And we're basically not bringing in any shipments right now. Like, we're basically holding off on importing any inventory because say you buy like a humidifier or something, right? And the retail for that humidifier is like $100, but in China you're paying say $15, right? Right now with the tariff, that's like more than double the price. The tariff right now is like 150%. So there's just almost no margin anymore. And Andy Jassy, the CEO of Amazon, just came out and said, like, obviously there's certain industries where people are still going to have to import, right? There's like these high demand products that you're going to just have to continue or you're going to lose to competition. And people are just going to pass that cost, these tariff costs, onto the consumer. But where people can be flexible, where brands can be flexible, they're just going to wait, right? And if that waiting occurs for too long, that's going to have a huge impact on China. That's like a huge component of their industry is exports, obviously. And if people they're to stop exporting for a month, like in the short term, for me as a brand owner, like if I don't import stuff for a month, I have a good amount of inventory here for most of my brands. So it's like okay, like maybe I'll go out of stock on a few things. But if you add that up times, millions of companies that are just basically saying like, we're going to wait to import from China for a month, that's going to crash their economy. And I've talked to people in China and they're all begging me to import stuff, begging me, saying, please import, please get this stuff out of our warehouses. We will give you big discounts. Some of our suppliers are offering us 30, 40, 50% discounts on inventory that wasn't even asked for just because they're getting cash crunched so hard right now. And I don't know like where those costs or whatever are coming from, but I know that they're feeling it hard, much harder than we're feeling it right now domestically.
Yeah, and exactly.
Definitely. Yeah, definitely they're feeling it a lot harder. And a lot of the thing is, especially in that business, because I knew some people that, they were exporting stuff from China. It's a very much, on consignment business where I take this from you and this from you, and then I pass this on to him because a lot of people like, there's a lot of people in the middle. So when that stops, when the music stops and the money stops and the money dries up, it's going to be, it's going to be huge. A guy like you, a month sales go down 5%. It's not the end of the world. You know what I mean? But to them, man, this going to be, it can literally decimate them. And then that's going to completely change. That's going to shift the power dynamic. And when you come to the negotiating table and your people are hungry, there's a lot less leverage. You know what I mean? And that's why, like you said, it would be so much smarter for Trump to let the people in America know what's going on. So at least the people who see it and people understand, listen, we have to go through this nonsense. At least we see the end of the tunnel. The people who don't see the
Yeah.
end of the tunnel, how can you ask someone to keep going when
His
they're
ask is unclear, in my opinion. Like, I
exactly.
think China, because like we negotiate with China all the time, and I'll sometimes be hardball mode. I'll be like, too much money, I'm not paying it. Like, you let me know what you can do. And they don't like that. They want to have, like, we need a 50% discount. And they'll tell you straight up if they can do that or not. And then you can ghost them for, 30 days and then hope, they'll eventually come back to the table. And it can be very much like a back and forth, but you can't just have this like, ambiguous ask ever. It needs to be very specific and like
Yeah, so
I don't know that it is at this point.
I this is the thing. So I heard something very, very important. I want to remember exactly who said this. I think so. I don't know if you know Jeffrey Wu, the guy who he works with Jake Paul. They started Anti Fund, the W brands. He's a pretty smart
Yeah.
guy. And he was talking about, yes, art of the deal, lack of communication, communicating too much, what you say, fancy words, all that is great for negotiation. But at the end of the day, there's only one true thing. What is what you have worth? And what we have keeps the entire world spinning. If America was wiped off the face of the earth, this world would it would come to an abrupt halt. You know what I mean? Because we are the ones, we are the consumers. We're the lifeblood of all these countries. And we're not just talking about consumers of just imports and exports. We're talking about, how many places in the world are solely run just by American tourism, by this, that. It just America, we have such a high GDP. We have so much extra.
Or the thriving middle class too. Like that's the
Yeah,
thing. Like when you go to other countries that you just don't see is like a lot of people that are making at least $50,000 a year, right? And like $50,000 in LA or Miami is not a lot, but people that are making 50 to $125,000 a year can take at least one trip or vacation a
this
year in a
is
varying capacity. Other countries just don't have that. That's the
yeah.
greatest accomplishment of America is that like general welfare line that's like pretty fat. Of course, there's people that
1,000%.
are like unfortunately below that. There's people that are way too above that, but the thing is like we have this big fat belly that other countries don't have. And I agree with you, Sam. As soon as that belly is like squeezed in either way, like if it goes away from China and we just have, you don't have access to this like fat belly anymore to eat all your shit that you're pumping out from your country. Like there's only so much stuff they can sell super low cost to
Yeah.
like Africa or Europe or whatever and capture really low margin. Whereas like the US, they're getting high margin and they've been getting it for way too long. And that is a valid point that Trump has, right? You can't be selling all of this stuff into our country and then take all the money out of our country and then super prosper, right? Like that's what's happened with China over the last, 25, 30 years is like they've just seen this proliferation of like being able to suck money out of our country. And I think there needs to be a challenge to that, right? Of saying like, either you face like a higher taxation rate by doing business in our country. Like we have to figure out how we're going to keep more of the money here. 80% of Amazon sellers now are based in China. And that's a big red flag because like there wouldn't be that many sellers if the money wasn't that, good, right? It's like the gold rush, right? People rush in when there's like a lot of opportunity. And that has been existing for Amazon sellers in China who can sell on Amazon, make, 15, 20, 25% margins, and then get subsidized by the Chinese government, which Trump talks about pretty regularly, right? About that unfair trade that the government supports. But again, I just think the ask needs to be clear. The ask is clear. I think we can get past all of this. So hopefully we get some
Yeah.
news on that.
Yeah.
I don't know what's going to happen with the market though right now. I'm just holding as it stands. I'm still holding Meta that I bought last week. I might add like a little bit more AMD. Not sure. Have you guys done anything with crypto?
Yeah. Let me just
Yeah,
on that.
I've been buying crypto. Probably bought like maybe in the the last what I guess week, probably like point one of a Bitcoin. I mean, it's been just real big drops. I mean, we saw like what, like 73 something. It was like 74, I mean, I'm just adding like I'm looking at in the, the 10, 20 year game, the long game. So, I'm just adding to that, but besides that, I'm not adding to any
You
other
guys
crypto.
think Michael Saylor was getting a little sweaty there for a second? Like with the,
I don't
with
think
the
so.
crash?
Nah, I don't think so at all. Because I mean, bro, he ate the $70,000 crash to 15,000. He can get liquidated. I mean, anyone who says something like, "Oh, well, if Bitcoin goes to X and Michael Saylor is gonna that's like a red flag that they have absolutely no idea what they're talking about. Um, Bitcoin can literally go to $10 and still won't liquidate. It's like 0% bonds. Like the way that they set up the structure, how he structured it for the money that he was receiving, but
Yeah, I mean they would have to I mean they would have to at certain points are selling assets and Bitcoin may be one of them. But here I think crypto is very interesting right now. I buy Bitcoin daily pretty much, and then on major dips I'll make larger buys. So I added a little bit to Bitcoin, a little bit to ETH, a little bit more here and there to some alts. I think all the attention, like we had talked about before, is on the stock market right now. Again, it's like the cryptofication of the stock market. So why trade crypto if you can get 50 to 100x returns a day, potentially? It's all about the potential returns in the stock market, right? So I think as we see the stock market get less volatile, which will definitely, in my opinion, with 99% certainty, be less volatile 6 to 12 months from now than it is right now. I think we'll see a lot of institutional money, trader money, and then also I think we'll go back to crypto. And then again, I keep bringing up this point. This is by far like not even close. Like we're comparing like 100 to like a 5 in terms of like the scale. This administration is so much more crypto friendly than all the other administrations we've had. We just had a new SEC chair who's like very pro crypto. So I think there's a lot of real companies building right now, a lot of real projects being built right now. The sentiment around ETH today is reminding me of the sentiment around Solana a couple years ago when it went down to like $10 to $20. Could ETH go down to 1,000? Sure. Is my favorite coin? No, but like realistically on a long enough time horizon, are we going to see a day where ETH is 7, 8, 9, 10,000? I think that's more likely than not. So I think at this level, it's a good risk to reward
I
play.
personally think that we need to see some type of catalyst for crypto to run again. And generally, we need some type of market sentiment change that's from either an announcement of no income tax, which the guy's been talking about, or some announcement of no capital gains tax or something like that. Crypto just historically has run when there's been like an event that's in the horizon that people like start to buy for. Because the overall value of crypto, in my opinion, is a store of value. I know we've had kind of the rhetoric of there being platforms that were going to be created or various virtual land was like a sentiment for a while. I don't think NFTs, I think NFTs are as valuable as people believe that they're valuable, but they don't actually have any real true utility beyond just being like art, essentially, which is still valuable, right? As long as people deem it valuable. But I don't know that my life is going to be more efficient from crypto. I think I asked ChatGPT the other day if it thought that Michael Saylor's thesis on Bitcoin would prove true, which I thought was interesting. And it basically said yes, which is pretty interesting because I said, Do you feel that over time is rhetoric will essentially prove out to be that Bitcoin, will be the main store of value? And it says yes, as fiat currency continues to basically experience volatility and inflation continues to rise, which doesn't seem to be slowing down in any meaningful capacity, that Bitcoin is going to be like this de facto currency that people eventually move towards. I just don't
Well,
know on what time horizon that happens.
I just feel like we kind of hit the, I don't know exactly when it happened. I think it was probably, I think the last nail in the coffin was the COVID slash PPP slash trillions and trillions of dollars that were printed. And I think that was the last nail in the coffin. And I think that set off hyperinflation, and there's no going back. There's no way you could explain to me how almost, how much in the last 5 years, I don't know what the percentage was, but it was an insane amount of all the money that was printed.
30%,
Yeah,
30%
which
probably now,
was
yeah.
just
35
insane if
maybe.
you really think about it. And I feel like those numbers are 6% inflation, seven. I think those numbers were probably closer to 8, 9, 10%. And that's why when people are saying, well, the stock market's so overvalued, well,
Yeah.
is it really overvalued? Or has inflation just
Yeah.
shot down our what the value is worth? Because that's just how it is. This isn't, like I always say, this isn't your grandmother's stock market. It's
Yeah,
not. No,
I
go ahead. Yeah.
yeah, when you compare the all-time highs in the in 2021 and the inflation adjusted all-time highs
Based
just
on their
we just
numbers.
had.
Based on their
No,
numbers
no,
of
I
inflation.
use the true inflation data, so it was like a 25, maybe 28% aggregate change since like the last 4 years. I mean, we're significantly like 10 we were never even closer than like 10 or 15% off of all-time highs. We weren't even there yet. You guys are very correct in the sense that the system that we have, like I talked about in the first episode, it's kind of like a house of cards. And I think what's happening now with the tariffs, what's happening now with Doge, what's happening now with the trade agreements, what's happening now with going after fraud and actively trying to like cut down the mass amounts of money that's being spent. I think that's all required to change up the trajectory. Like you were talking about how, people in the US, there's people with a lot of income. That is honestly one of the greatest things the US has ever done. Create this class of people that are able to live this amazingly wealthy life. And I think we all should be who are here should be extremely blessed and thankful for that. But my concern has always been that that is not sustainable because of the extreme money printing and the extreme like devaluation of currency and debt. And with these things that are happening now, I think it's going to create a shakeup. Obviously people are going to lose their jobs. If you're in the federal government, you're going to
You
lose your
see,
job.
this is the thing. That thesis only worked when middle class people were able to afford assets. Because when inflation debased their savings account, at least they looked at their starter home that they bought with their wife at 25. Now they're 50, and that starter home is about 5 times as much money. So they see some sort of increase in net worth, but now that's not the case anymore. Yes, people still have enough money to live a middle class life, but without the middle class assets. They're not owning, they're renting. They're not taking all of the L's for the inflation, but they're not receiving any of the benefits because they don't own any assets. And some of them were trying to get into stocks, this, that. So that's another thing where that was a huge
Yeah.
catalyst. People getting
I
into
would
the
say two
market.
things on that, like, or even three. Gold obviously continues to rise, even as the stock market rallied yesterday. We're still seeing gold value continue to go up, and that just represents sentiment continuing to go down. And it's a store of value outside of paper money. So gold has historically been valuable, even dating back to the Egyptians. But it will always continue to be valuable, and it generally is a hedge against the general global economy represented in paper money. So sentiment is still low. I think one saving grace of the US economy that we will see in the next 2 to 3 years is AI. And right now, I think AI is a lot of fluff, right? There's nothing that's really adding a lot to GDP. I just looked it up. In the last 2 years, there's been 34 AI unicorns. So those are AI companies worth over $1 billion that were created in the last 2 years. So that's really extreme, right? For there to be that many, 34 companies that are essentially have equity value of over $1 billion. And a lot of that money is fluff right now. It's been fluffed. You could just say that's contributing to inflation as well. But Goldman Sachs did an interesting study where they said that they don't expect a significant impact to GDP until 2027. But where I think that's true, I also see, even with this podcast, right, where we started to edit reels with AI, you can make music with AI now. There's still these very like soft applications, but historically, you'd have to pay someone offshore potentially to edit your videos. You can do a lot more of that in house, and you can essentially create a lot more value more quickly in terms of your productivity, which was not previously possible. I think we will still continue to see that. There will be a cannibalization of historical jobs, like fast food workers will obviously be outsourced to AI and things will start to be made by machines. But I still think the net impact is going to be positive to GDP versus, the negative net impact to GDP. And my last point, just really quickly, is with Robinhood. I still think that there will still be this great exchange of wealth that we're still continuing to see. I think there's still these market makers, right, that control these swings that are happening that I still think need to be investigated. But you're seeing more people get involved in the markets. So I think as more people get involved in the markets, there's more value to these AI and tech companies. We're going to start to see more people become wealthy, have more value. And I hope that can course correct, right? Or we're kind of swinging in the wrong direction. I hope we can like hook and activate, more wealth and add more actual value to that wealth.
100% agree. Yep.
Yeah,
That was a
there's a
really good
lot.
take.
Yeah, I mean, there's a lot there I agree with. I mean, just to talk about the AI point, it's insane. I think, I look at what I do every day, right? For work, for personal stuff. I'm using AI. Like this podcast is so much easier for us to do with AI, with the tool we're using right now. AI transcription with the tool for making clips, AI transcription. Like it's just so much easier, and that's just one little thing, right? We are getting to the point where it'll be, I think a lot of people are talking about kind of more retail getting involved in the markets and more of this and more decentralization. I think we might get to a point where things are more decentralized in terms of access. But I think in terms of the actual assets, they're going to be way more centralized. Like the people who take initiative, the people who take action, the people who really like capitalize on these moments, whether it's by applying capital, whether it's by applying technology through AI and other things, the delta between those who are using these tools and who are using these formulas and all these things and the people who aren't is going to be insane. Like again, I just, a belief I have is we're going to see, some of the richest people in the world become even richer. We're going to see a class of extremely wealthy people who are then able to, use things like gene editing and extend their life and all that kind of stuff. And then a lot of other people aren't. That's going to be the vast majority. So they might be able to pay anyone in the world extremely quickly without any third party, but that's a benefit, but we're still going to see these crazy deltas. So I think we're in for a very, very interesting next 5 to 10 years. And I'll just say again, like I say every time, it's super important to try to be on the cutting edge of like what's happening, right? Whether it's in the markets, you want to be invested in things that you like, things that are high quality. You want to be using this new technology. You want to be actively participating in the upside because 5 to 10 years from now, you might look back and say, oh, shoot, I missed out on this. How like we think back, oh man, I wish we bought stocks in '08. Oh man, I wish we bought Bitcoin in 2012, 2014. There's gonna be a lot of people who maybe they listen to this 10 years from now and they're like, damn, I should have, done XYZ with
Listen, at
AI.
the end of the day, we're at the first stages of all of this, and like I said, if people don't really understand what it is, people don't understand what its full utility is, like the same way people don't understand the cell phone or the computer or the internet or even electricity. So we have to wait and see. Like you said, stay on the edge and you stay focused, stay locked in, and make sure that you don't let
And you
opportunities
don't
pass
have to be
by.
an engineer. I think that's like the scary thing is like we're talking about it at a high level. And obviously, like, a lot of people who are listening to this are, smart people. I'm not an engineer. All that stuff is elusive to me. I don't have the slightest idea of how to code. But the thing that's valuable to me is like even this captions app that I've been using, captions.ai. I like it a lot more than Opus Clip, which I was using previously. And I was paying this guy like $20 to $30 per Instagram reel that we were putting out. And now I'm paying $24.99 a month. I just download this captions tool, and these clips are just as good as his clips. This guy's
Yeah.
offshore, and I'll show you guys some of these clips, but it's just insane what you can do with AI now. So it's just research, anything. And I also use ChatGPT sometimes too. I'll prompt it and I'll be like, hey, what are some ideas of how I can go about, editing my reels better? How can I go about making a Shopify store with AI? Use AI to learn about AI, which is also kind of an interesting tactic. But we're going over time a little bit. I think this was a good episode. A lot of facts in here. Anything closing out, Ben or Sam, you guys want to say?
I think that we had a great discussion. We're really getting to the meat and bones of what's going on right now. We're playing it from both sides, and we're not holding back. We're letting people understand that we're not cheerleaders for one side. We're not Trump cheerleaders. We're not anti-Trump. We call it down the middle, and that's what we'll continue to do.
Yeah, I think just stay curious, stay focused. The markets right now are crazy. Times are crazy. Do not lose sight of logic and reason, right? Don't make decisions out of fear. Don't make decisions because, out of a scarcity mindset. Stay positive as much as you possibly can. And just while you stay positive, actively make like positive decisions every day. So I think that's where we're at in business and life and everything. This has been another good episode. We're making these a little bit shorter so you guys can digest them more easily. And we're going to be coming out with a bunch of clips very soon. Well, check us out on Instagram. Check us out on YouTube. Follow us on X at DGen. Download. And we haven't asked this before, but if you are following us, if you're enjoying the content, make sure you like on YouTube. Make sure you subscribe on YouTube and on the podcast, wherever you listen to your podcast. Let's blow this community up. We want to be really providing value to as many people as we can. And that's it for me, everybody. Adios.
Waves tight, let's start the show.